Yo, what's up? What's up? What's up? Just have a little sip of that H2O. You know, two hydrogen molecules bonded to one oxygen at room temperature that forms a liquid. Drop some science on these niggas. Kind of a losing day for me, man. Today, emotionally, very, very losing day for myself, emotionally speaking. But basically a loss on USD CAD, which is like two losses, but it's just the one because it was half risk on each. That was simply because of entered using two different models on the same idea, but I think the gist of the idea was good. The entry of the models both were valid, I'd say, and yeah, either way, had I chosen either one, I would have taken a loss anyway. Both were targeting 3R. Actually, I'm lying, 5R on both because it was pro swing pro internal. Uh, Start off with Euro USD finally hitting TP today. Right, finally hitting TP, and yeah, this should be logged in. Good setup, all nice and dandy, right? Even though, yeah, I did have this little bit of fear coming into the swing low, right? Every time you come into a swing low, of course, there's gonna be, not of course, but you may find a reaction. Hence, I do not like finding myself targeting past a swing low or a swing high, right? Because you need a lot of momentum slash money behind that move, like to make the move work out. So typically, I don't like targeting past a swing. Hence, this was a okay trade because it was not targeting past the the swing low, but it was targeting the liquidity below here, which did end up getting swept. And then there's a little nugget in here, right? Which is basically the same idea as this one here, where you have liquidity being swept on the Asian low, right? Liquidity being swept on these equal lows here, and then you have a chart here. You have a chart, actually one lower there. Using this entry model that I used to get the sell, right? I would have entered on that. So what 2.2, right? So what is the major difference between these two trades, like this one and this one? That's where I think the difference is in terms of a good setup and a bad setup. It may be the same setup, but one is good, one is bad because of context, right? Context of the market. This one came into a 4 hour zone, right? 4 hour zone. It's the strong internal high as well, right? So expectation is for this move to end and then for the move to start going down, right? That's expectation, and that's exactly what happens. Now, difference is this is exactly the same, right? Where okay, also I was gonna say like the sweep of the Asian high, chalk, right, and then entry. Same thing happens here. Sweep of the Asian high plus sweep of these equal lows, which is better in terms of sweep of liquidity, right? And then you get the chalk as well. But major difference is the market context, right? Here we are bearish, right? The market is bearish, internal is bearish, swing is bearish, and so this is a risk entry, but the market allows for risk entry because you are following the bearish momentum. In this case, you're going against the bearish momentum, right? So you can't use this entry model because it's against the momentum, right? This is a good I'd say trend following entry. Yeah, that's a good way to put it. A good trend following entry, and it does not make for a great counter trend slash internal trend entry model. So hence I do not use it on the counter trend, right? But pro trend, pro internal, then this is a very good model. Counter trend, counter internal, not a good model. So obviously I would not take this. I think counter internal, the context of the market will also matter, right? Because I wouldn't want to be like, let's say it's counter the internal, right? I would at least want to see a very strong zone below here, right? Shit. I'd want to see a strong, let's say for example, 4-hour zone right here, like a very strong 4-hour zone that created a high or something, right? From, and then a reaction from this strong 4-hour zone or a 15-minute zone where it kind of gives me the conviction to be against the swing, where expectations is for this zone to have at least a reaction, right? It doesn't have to be the zone that holds, but it should have a reaction. Like this zone here at least had a reaction, you know. So market coming back into the zone, you do expect a reaction from this zone. So yeah, a little discrepancy obviously will be needed. Discrepancy plus, I'd say, experience, right, should make like a good difference. But this is a model that I'm tracking, right? I'm gonna start taking note of this model. Then let's move on to GU, where I ended up taking my two losers. This is kind of just one, but it's two. In my head, it does make a little bit of sense, so I'll try and explain it as best as I can. Alright, cool. Oh, that hurts. Okay, this would have been the internal high before the break. There. Right, cool. Let's see. 4 hours bearish, right? We had a boss yesterday. 4 hours bearish, comes into this 4-hour zone, right? Let's look at the 4-hour. For context, this zone got a reaction from this previous zone, right? It's like a flip zone. Not the strongest in the world, but anyway, it does end up having a reaction, right? So it's the kind of zone I wouldn't have minded trading through, right? Because it already got its initial reaction. So my thoughts are maybe we don't get a second reaction and then I can just look for sells in here. But before looking for the sells, I did have an idea for buys in here. But like I said, market context is crazy and valuable, right? This was a valid IBOS, right? Making this a valid zone on the M15. Not the strongest because it only got an IBOS, but as you can see, the context of the market, right? We have the sweep of Asian liquidity right here. Sweep of Asian liquidity pushes down, right? Doesn't come into the zone and then pushes up. So my thoughts were, okay, if this pushes higher, like out of here, pushes higher out of here, and then I get a break-in close on this high, this would have been my new internal low, and then I would have looked for buys following that, right? But then it doesn't do that, right? It just sweeps the high and then comes back to these lows, and then of course I'm not interested in looking for buys from here. This is a weak zone, right? It hasn't achieved much, and as you can see, there's like a bunch of liquidity below here, and lo and behold, that gets swept. Cool. Once that gets swept, this internal low becomes M15 IBOS, right? Break of internal structure, and then I'm looking for phase 2A trades. I'm looking for phase 2A, which is like basically continuation of the bearish momentum, right? And then this zone in here, there is no liquidity pulled up to the left, right? There is no real chalk before the zone, so technically I can look for risk entries on the zone, right? Technically I can look for risk entries, and then because the zone is far as well, right? The market had to really push up for, let's see, from 12 until 2, almost like 3 hours, 2.5 to 3 hours. I'm thinking, okay, maybe let's build some liquidity to the left, right, for the zone to have a little bit more, what do I want to say? A little bit more conviction, right? A little more trust in the zone, right? Look for liquidity to build, and then there was a valid liquidation in here. You would have had to jump to the lower time frames, like the 1 minute, to see it, but right, I'm not going to get into the nitty gritty. I'll just say, okay, this is an internal, right? Internal means this is a down, which means there's a chalk in there, or the chalk is up, and then a, Jesus man, it's too close for my eyes to even be able to see the fucking entry model. But it's a valid entry model, not the best looking, right? But it's kind of valid that when you do get this M15 candle close, whatever, it's a valid model. I just can't, or rather, let me go the 1 minute so it makes a little bit more sense. Let's go 14 minute candle, right? Starts by moving down, moving up, sweeping these lows here. Right, so this would be a sweep of liquidity on the M5 minute sweep. M5 minute sweep right there, and then you have a strong liquidation here, right? The sweep of a high that created a low, right? That created a chop, so strong liquidation over there. On the M5, it's a little bit more iffy, but once you go down to like the lower time frames, it makes a little bit more sense. You can see, right? Sweep of liquidity, strong liquidation there. Sweep of liquidity slash chalk, right? More or less the same thing. Comes in here, and then right, entry candle, entry model triggers, right? You can I took the entry model, plus I took the risk trade, like half and half in terms of risk, so it's basically like taking one trade. That I think that's what makes the most sense, instead of risking double on the same idea. That's what I don't want to risk double on the same idea. I think in terms of risk management, that's better management on my part, right? And then after that, yeah, you just have a chalk, not a chalk, M15 IBOS there. I just want to capture this trade before like moving on to the analysis for tomorrow. I can just do the analysis tomorrow morning as well. And then USD CAD pullback phase, right, for today into this 4-hour zone. Something a little bit interesting, although iffy, but interesting nonetheless. In the morning, I was looking for an IBOS, right? Not the most convincing of IBOSes. They are in the world, but internal structure is internal structure, right? So we've had an IBOS there, a movement down, right? There wasn't a great POI in here. I was looking at this and I didn't see a great POI in here, to be honest. This would have been the POI, but then I was like, are you going to include all of this, you know? So no great pivot POI in here, so I just didn't look to sell in there. And then comes the London low at 12, and then I left the house at, what was it, like 1:30 to 2, right? So I basically missed an hour's worth of price action between like 1:30 to like 3 almost. Came at around 3, 20 past 3, I think. Now during that time, there's something a little bit interesting, right? This is the M15 pivot. After the IBOS there, you then had an IBOS here, IBOS there, which makes this the internal, right? Following this internal structure, looking for cells just before the 4 hour zone, right? Looking for cells before getting into here. So my question is, since I did not see this live, would I have considered this is an actual sweep of liquidity, right? M50 liquidity, I want the sweep of liquidity. Do I not have a sweep? Let's just use the fuck. You. What is the liquidity sweep M15? Right, liquidity sweep on the M15 here. And then we get this pullback, right? Creating this zone before this zone. Which now I'm asking myself the question, would I have 2 o'clock is New York open? Would I have followed this zone right here, right? On the M15, taking a risk entry on that, then taking a loss, right? That would have been a loss right there. On the return, there would have been a loss on that. My question is, looking for 3.3, should have been there. My question now is, this is good valid M5 liquidity, right? Liquidity built to the left of the pullback. Would I have then had the mine after taking this loss, right? Would have been like 5, 15, 10 minutes before this zone was triggered. Would I have been conscious enough to then notice, yes, this is a valid liquidity sweep, and then take this trade over here, which would have ended up being a winner? Would I have been able to spot this is my question. 3.3. Would I have been able to spot that? That's kind of tough to say, honestly. So yeah, I missed out on this bit of price action here. Right, following tightly the M15 pullback, I missed out on this price action over here. Yeah, actually, I probably would have seen this. I probably would have seen, because I thought I would have been preoccupied with GU, but GU was like 3 o'clock, right? 3. This was like more 2:30. Would I have caught that, man? I asked myself, would I have? Questions in my mind. If I was following the strategy as I should, then I would have followed that. But now that's the annoying part is hindsight, right? Hindsight doesn't really, doesn't work. It does work, but it can give you false reading where you think, yes, I definitely would have taken that, because it's literally like 10 minutes after taking a losing trade, right? You would have had to like be locked in again for this idea here, and this idea has liquidity over here. You know, emotions are at a high. So yeah, I'm not really sure what I would have done on that one, but this is actually valid. So we'll just note these two down as valid trades, right? Even though one is a winner, one is a loser, but these were actually valid trades that I did in fact miss. Right, just an hour, stole just an hour of my time, and then you do miss out on a winner. So yeah, on the new account that I'm planning on getting, definitely need to be way stricter with time. Like, I think the single biggest problem besides showing up has definitely been showing up, because I'm missing a lot of fucking trades. Besides just showing up and showing up, missing trades, man. And missing trades because I'm not showing up. Not because I'd rather would have missed this because of focus and emotion and whatnot, because I can work on that, right? Missing it because of showing up denies me the opportunity to not miss it because of emotions, work on the emotions, right? Because now I'm gonna show up one day for that, and then I'm gonna miss out on the trade because of emotions, and I could have worked out the emotions now, and then in the future not have that. So little conundrum right there. But anyway, half decent day, I'd say. Happy with the loss on GU. I think it was very good loss, right? The idea in my mind was good. Not the highest probability trades. I think it was a fair probability. It just didn't work out, and that's that, man. You know, gotta take losers. 100 losers. Road to 100 losers that are actually valid, right? In a row, like no mistakes, nothing like that. 100 losers that are 100% valid. That's actually the goal. Yeah. Yeah, been rambling for 22 minutes, man. Let's see what Wednesday has in store for us, man. Peace.